The choice of entity affects how income flows, how you pay yourself, what payroll looks like, and what options you have when you expand, add partners, or eventually sell. The right structure today should also be adaptable as income and complexity grow. One common mistake: choosing an entity without understanding how it interacts with compensation and retirement plan design. Owner compensation must be deliberate and defensible. How you pay yourself shapes tax exposure, retirement plan contribution capacity, and cash flow predictability. It also needs to be compliant. Compensation that looks efficient on paper can become a liability if it's inconsistent or if it's poorly documented. Build clarity around 3 questions. What does the household need? What should be reinvested? And what should go toward long-term wealth building? Payroll is where strategy meets execution. Even well-designed compensation plans fail if payroll isn't implemented correctly. Aligning payroll schedules, withholding, and estimated tax payments, as well as benefits, requires coordination, not just accounting. Lease-driven costs and operating expenses also need to be taken into account in your payroll planning because they affect true cash flow and withholding needs. Tax planning is ongoing, not just at year-end. Integrating tax strategy with compensation, entity structure, and retirement planning year-round is what creates real efficiency. Tax diversification, which means spreading your assets across taxable, tax-deferred, and tax-free accounts, becomes increasingly powerful as your ownership income grows. I worked with a practice owner who was running a profitable practice but paying far more in taxes than necessary, not because of bad advice, but because of a lack of coordinated planning. No one had ever connected the entity structure, the compensation design, and the retirement contributions into one coordinated model. Once we aligned those 3 pieces, the tax efficiency improved significantly, not through anything aggressive, just through better coordination. Entity structure, owner pay, and tax planning aren't separate decisions. They're one system. When they're aligned, each year compounds. When they're not, friction builds. Connect with an earned advisor to make sure your structure is clean, defensible, and working in your favor, not against you.